Hi, I'm Mike Stanton. It's March 7th. This is the BAM Weekly Muni Market Update. I'm here in Chicago at the Bond Dealers of America Municipal Market Structure Conference. Morgan Fahey joins me from New York and BAM's Capital Markets Desk. Morgan, thanks for taking some time.
Thanks, Mike.
So a fairly interesting week. So volatile week driven by headlines and news right through this morning on Friday when we got the February jobs report. What was driving the market?
Sure. So the market was definitely focused on the economic data and the tariff headlines this week as we wait to see what the Fed will say at their meeting later this month. This morning, the market processed a slightly weaker than expected non-farm payroll report, where we saw a number of 151,000 versus an estimate of 160,000. And last month's original report of 143,000 was revised down to 125,000. The unemployment rate came in slightly higher than expected at 4.1% versus the estimate of 4%. And as the market digests the economic data from the last couple of weeks, it seems as of right now, we are pricing in at least 2 cuts.
I was going to say, those inline reports just reinforced investors who think that there are more Fed cuts coming later in the year. How did those headlines translate into actual market activity? Maybe start what we saw from treasuries and how did munis end up the week?
Sure. So we did see treasuries fluctuate throughout the week, rallying a little to start the week, sold off yesterday, and then rallying again this morning. At the time of the video on Friday morning, the 10-year was at a 423 and the 30-year was at a 454. And just in terms of economic data, as we look towards next week, the market will definitely be awaiting important inflation data with CPI and PPI being reported. And then on the muni side, prior to the non-farm data this morning, munis were wider on the week, about 8 basis points in the 10-year part of the curve and 11 basis points in the 30-year part of the curve.
And again, I think it's kind of the second week, modest lagging treasuries and ratios moved up a little bit further as well. Looking ahead, we did see continued strong, a 7th consecutive week of inflows to municipal bond mutual funds this week, although there's some evidence in the marketplace and certainly discussed here at this conference about weakening demand. So we'll see how those reports look next week as the volatility is kind of filtering through to the retail level. Might be a little bit of slowdown in buying. What about on the new issue side? The market seems to be remaining very active.
For sure. The new issue calendar was extremely busy this week. We saw around 13 billion, and BAM had nice activity, pricing around 330 million across 19 series and 8 states. And a few deals to highlight here were the 70 million City of Hot Springs, Arkansas across 2 series, which was priced by Stevens, a 38 million Youngstown State University in Ohio, which was priced by PNC, 34 million City of Huntsville, Texas, which was bought by Baird, and a 26 million City of Hutchins, Texas, which was priced by Estrada.
And another thing, you're starting to hear more municipal advisors and bankers talking about refunding, sitting on the sidelines. A really healthy market, I think, as professional advisors to issuers are looking at their debt stack, looking at opportunities to optimize that, and just kind of waiting for the moment to strike. So we'll see. We know that supply is out there for the rest of the year. Certainly the tone here, one of the quotes at the Bond Dealers Conference yesterday was that people think that in the next couple of weeks, we'll look at year-to-date volume and think that the $525 billion number may be in our rearview mirror before the end of the year. And again, last year, $507 billion was an all-time record. So if it pushes past 525, it will be a very busy year for the muni market. Thanks again for your time this week, Morgan. We'll talk to you soon.
Have a good weekend.